Hey guys, welcome back to the channel. I wanted to have a chat with you today about the economy as a whole. Here's the thing that you're going to hear a lot of in the news in the next couple of days, especially if the GDP numbers for Q2 2022 come out kind of sucky, right? And it really kind of looks like they're going to be. Of course, I don't know. Nobody really knows. But if the GDP growth numbers come out negative for the second quarter of 2022, what's going to happen is that it's a recession, right? We've already had one quarter of negative GDP growth. With the second quarter of negative GDP growth, we have a recession. Now, how they're going to call a recession and when they're going to call it, that's a little bit iffy, because they're going to look back retroactively and figure out the first 120-day period where GDP didn't grow and all that sort of stuff. So we could actually already be in a recession. It's very, very possible. Now, I say that almost flippantly, right? That there is a very high probability that we are currently in a recession, and that's okay. Here's the thing. For the last basically 100 years, recession has meant one thing, and that is job losses. But if you actually look at the data that's coming in right now, we are hiring like crazy in the economy. So what's going on here? How can we simultaneously be in a recession and have this huge hiring boom? And here's the thing that I want to dispel from your mind. Recession does not necessarily mean job loss, right? What it means is that you are not employing all of your factors of production efficiently. That is what a recession is. So what have we seen for the past 100 years or so is that the marginal rate of substitution between labor and capital has been in favor of capital. So when you go into a recession, you pull back on labor and you buy more capital. Now, I'm not saying that this is the case at the moment, but we have substituted a lot of labor for capital over the last 100 years or so, last 200, 300 years. We have really, really gone away from labor and moved almost exclusively to capital. And the question then becomes, what is the marginal rate of substitution between capital and labor today? And it could be that we are in a recession and we have and that ratio has flipped. The marginal rate of substitution has flipped in favor of labor. And it could actually be that we go into a recession and people hire more, right? It's kind of a bizarre concept because it's never happened before. I'm not saying that it's happening now. I'm just saying that recession does not necessarily mean a job loss for you and your family. It doesn't necessarily mean job losses across the economy. It could be that we hire more labor and pull back from capital because labor is relatively cheaper than capital. Historically, we haven't done that, and the reason why we haven't done that has been because we have minimum labor laws, but we haven't moved the minimum labor up any appreciable amount for over 10 years now. So who knows? Maybe we are in that weird situation. That could actually be the case, in which case, what does that actually mean, right? For you, it means that the labor market is tight, and it might actually get tighter. Believe that or not, a recession can actually cause a tight labor market. Again, this is really, really weird economics, and I'm not 100% sure that's the case, right? I'm just saying that it could be the case. Most likely because labor is very expensive in the United States. I can't imagine that capital is more expensive than labor at the moment, but it could be. And we're seeing signs that it's kind of the economy is kind of sort of acting that way right now, which is strange, and it would be weird economics and weird economic policies. But I mean, it could be the case, right? We went through a recession with COVID, right? And back in 2020, that wasn't that long ago, and it could have been that we over-substituted for capital in the last 2 years, and now we need to move that ratio back more into balance of labor. It's a strange idea. I know, I get it, right? But the reason why I tell you this isn't because I wanted to give you a weird economic theory about what's going on. That's just not the case. The reason why I tell you that, a recession could actually lead to a labor boom is because I wanted to make another point. And the point that I wanted to make is that recessions have historically been scary, right? But we've had all kinds of recessions. We've had super deep recessions, and we've had very, very minor recessions. Again, in 2020, we went through a deep but quick recession. We could actually be in store for a long but shallow recession where it just doesn't do much. The economy just sort of stagnates. It doesn't go anywhere, and but employment doesn't go down or anything. It's just sort of, we hum along at the same rate or slightly below, or we just sort of bobble around in the same area in terms of GDP. That's completely possible, right? It would be a very minor recession in that case. We'd probably see employment stay pretty high. We'd probably see GDP in the negative 0.5 to 0% range, and it would just sort of bobble along. It just wouldn't be that deep, and it could go for a long time that way. And it could be, which would cause all kinds of political turmoil. But in terms of job losses and things like that, probably wouldn't be that bad. And honestly, with inflation the way that it's been acting, that's kind of sort of the best case scenario. Is to just sort of bobble along at the same level of GDP and just, that's it. We do that for a couple of years, and it's just kind of a sad economy. Nobody's really happy with what's going on, but nobody's really getting hurt that bad either. It's just sort of economy. It could be really, really bad, right? I don't want to dismiss that, but the thing is that you don't necessarily need to be scared of a recession. A recession could actually bring lots of opportunities. It could be very, very good for you. Recessions are just that. They're just a pullback in the amount of stuff that people are buying. It doesn't necessarily mean that companies are going to lay people off. I mean, it could be that, the optimal level of employment is much higher than where it should be today, in which case, because of COVID, like I said, we just don't you don't see much job loss from a recession. And that's the thing that I wanted to point out, is that it just doesn't matter that much. Okay, stay safe out there, guys.